Hello and happy Memorial Day to everybody. This is Coach Mike from winningstockcoach.com. Going to go through our market overview for the upcoming week, which is a short week, a 4-day trading week. It is the last week of May. And there's a couple really good things that I think we need to kind of be aware of as we prepare going into our trade planning for the week ahead. Going to start out on my weekly chart for the SPX, and through the last few drops, it's kind of given us a bit of a trend line to follow, which I have outlined here with the green line. And we've talked about, it's been about, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And into last week is our 12th week talking about the market consolidation that we saw. And last week ended on a very strong note. I personally believe wholeheartedly that, hey, so long as we hold the support level of the horizontal line, the swing high point that marked the high of the consolidation range, we are poised for more topside move. As far as predicting how far that topside move is, well, let's get into that right now. Over the past 11, 12 weeks, I've been showing you each week a demonstration using a very simple to use trading tool, Fibonacci extensions, on projectable targets that have successfully called within 0.1% each of these last few highs. So with using that tool in our projection, we're actually left with the expectation for the S&P 500 to rise to about 1904.74. Now, traditionally, the week that follows Memorial Day is a pretty low volume trading week. So I wouldn't put it past things to see it be low volume and inch up to that level again. But we also tend to see, you can see just last year's time, I'm showing a 1-year daily chart. And you can see it was, 1 year from this day that the market began a bit of a decline. This is commonly known as the summer sell-off. And you can see how there to start that last week of May, you had a bit of a run-up, but it gave almost all of it back, and it began its decline. Now, I think this can be a great tool to use to your advantage for many reasons. First reason, I don't think it's something you have to go sell all your long-term investments for. I'm not even close to being one that's saying, oh my gosh, the markets are going to crash. I'm not even saying you have to jump on and start leveraging some positions to keep yourself safe. I'm simply saying that right now, the markets actually gave us a break above the consolidation range line. And I wouldn't be surprised to see some slight continuation of that, at least on Tuesday, if not Tuesday and Wednesday, to get at or around the 1904.74 mark on the S&P 500. Now, from that mark, I would expect a pullback that still does not break below that consolidation line, which is transposed now on my daily chart, but from my weekly. And as we get into June and July, so long as the key support levels are held, see the potential for the S&P 500 to get up into the range of 1950.17, 1973.72. These are a couple price projection points that I'm watching for. But they can't get there until they break it here. And if for some reason they don't pull it back after trading it up to that 1904.74, you can quite simply minimize your risk by trading the stocks you know and love congruently to their indices, by watching that 1904.74 level as a potential stop point for your stocks. If your stocks are trading at a positive beta, they're going to trade in relation to how the indices move. A negative beta, they trade the opposite. It's on average. I use a 5-year beta with how I trade. And you can use that to your advantage when observing the indices' key support and resistance levels in assisting you in your trade plans. Now I'm going to take you over now to the Dow Jones Industrial Average, the DJI, the daily chart for it. Now, right now I'm showing a 1-year daily, but I want you to really get a good view of this. So I'm going to go to a 6-month daily chart. And I want to show you that unlike the S&P 500, which closed on Friday at a new high close, all-time high close, and a new weekly high close, it was just, a great week. The DJI actually, so far, has done nothing to get us to expect that it will continue. Now, I want you to focus on a key pattern here. It's called the head and shoulders pattern. Now, this is an unconfirmed pattern on this chart at this time. It is 100% unconfirmed, but it's not confirmed yet that it won't be this. So it's something to kind of prepare for, because it could be the difference of whether we see the DJI make a lower volume, was what I would expect, continuation to 16,719.64 area this week, or if we see it begin to decline, which may take more than a week, down to this first target of 16,119.20. Now, a head and shoulders pattern, if you could just picture yourself looking in the mirror, you would see an area where a high is exceeded by another high, which would be indicated of a left shoulder, which is the area I'm moving my crosshairs around right now, the head, which protrudes above the left shoulder, the neck area, which is the dip between the left shoulder and the head, the neck area again, which is the dip between the head and what will eventually lead to be the right shoulder. Now, looking at this chart, I think it's pretty safe to assume that the DJI has to make a very nice effort to rise to and close above 16,630 within the first couple days of the trading week without any further decline. Any further decline from that point, or the 16,630 area, could see the right shoulder of a head and shoulders be formed up. And once the neckline area, which is going to be around this 16,341.48, also this little dash line coming in from my weekly chart, and once that is broken, that is where the official confirmation of a head and shoulders would be seen. That's where the heavy volume and the larger movement would be seen based on the technical aspect of that trading pattern. So, going to be really, really important, I think, to be watching the Dow Jones Industrial Average the first day or two, Tuesday and Wednesday of this week, for whether it exceeds what would even qualify as a head and shoulders, or if it begins to pull back and give that right shoulder look. Now you can say, well, this is really strong looking, doesn't look like it's going to pull back. Well, I can tell you over here, it looks really, really strong in the closing time here from April 30th, but turned right around and began its pullback. So it can happen. I'm not saying it will happen. I want you to identify the technical pattern on the chart so that you can easily identify the bullishness or bearishness of DJI stocks, the 30 stocks that comprise the Dow Jones Industrial Average, should you need to effectively execute based on your trade plans. The Russell 2000, our small cap index, this one did something very, very interesting on Friday. Essentially, it closed close enough to call it right at the target I projected to you last week of 1127.08. Even though I would not be surprised at all to see the Russell trade up on some smaller volume, maybe into this down channel or downtrend line that I've got projected here, I would be cautious about being bullish at all on the small caps until you break. You see the top here, the top here, until you break these areas, which would also then be a break of this red down trend line. If we get that break above that point, our continuation would be just as any other. We could use our horizontal lines that I've got placed here on the chart to do something that I had spoke of here about a month ago, actually about a month and a half ago, where I kind of expected the RUT to come up into this area at some time eventually to actually give us the right shoulder. You see the left shoulder here, you see the head up here. We're actually waiting on the right shoulder. It has to come up remarkably to actually only verify an extremely bearish chart pattern. So small caps are still going to be a good focus, I believe, in the week ahead. But I wouldn't get any false expectations should you pull back from the areas you clearly see on the chart that could lead to an extreme bearishness. But I wouldn't be afraid to trade them either. This is Coach Mike from winningstockcoach.com, simply encouraging you to have a healthy understanding of a trade plan for every trade before you enter, and executing based off the accepted risk and reward from the trade plan that you designed. Best of luck, God bless, and thank you this week to, especially this week, to all the veterans that have served our country.